Assalamu alaikum, everyone. I hope you are doing well. It is Tuesday, April 30th. Bitcoin is right around 60,000. Tesla is back at 180 per share. And the market is presenting what I think is a buying opportunity, but it is not for the faint of heart. Investing is for the bold, at least doing it right is for the bold. And this is not to say that we should go in blindly into corrections, buying up whatever, but we should look at what the data is telling us. And that's exactly what I would like to go over in this live. So without further ado, let's get started. And before I forget, if you enjoy these lives, do leave a like. It really helps. Not financial advice. Be sure to do your own due diligence before making any investing decisions. So tomorrow, the Fed gets together to make the decision that we already know what it is, and that is they will likely keep interest rates where they are. The market is only assigning a 1.6% probability of a rate cut in tomorrow's meeting, but if we want to look at it from a different perspective, and perspective matters a lot in investing, the market is assigning a 0% probability of a rate hike. So we're at the point in the cycle where we are thinking whether or not we get a rate cut and not whether or not we get a rate hike, which is much more advantageous because surprises in the part of the cycle that we are in right now involve an enhanced probability of a rate cut. Whereas when we are looking for a rate hike, surprises typically involve a decision for a hike. So I think that generally speaking, we are in the point in the cycle where it makes sense to have a bullish bias as opposed to a bearish one. Speaking of probabilities, there is a 100% probability of more money printing, regardless of country that you're in. If we zoom in on the United States specifically, look at the debt and the debt burden that the country now has. If you look at the first 220 years, the total US debt reached 11 trillion. So it took 220 years to reach that number. Just since 2020, the US has added an additional $11 trillion in debt. So this debt has to be paid off at some point, and it will be paid off, as we know, from our knowledge of our monetary system. It's going to be paid off with additional debt that is issued. So you have a currency, the US dollar, which is set to increase in supply in a major way. Now, contrast this to Bitcoin, wherein we know that the max supply, as is determined by code, is 21 million. Now, I'm assigning a 99.9% probability that Bitcoin max supply is at 21 million, only because we really can't know the future for certain ahead of time. But all indications, certainly what we know right now, the intelligent guess is that it will max out at 21 million. So you have two assets. You have one where the supply is set to increase in a big way, and you have another that is capped. The supply is capped at a number which is very close to the current supply. So if you were to bet in the future, will the max supplied commodity increase in price when priced to that currency which is set to increase in supply a lot, or is it going to decrease compared to that currency which is set to increase in supply a great deal? Well, if you had to put your money on it, I would suggest that the commodity with the max supply will increase in price when measured in the currency that is set to increase infinitely in supply with time, and wherein the supply is increasing at an ever accelerating pace. So the uh, that's really the overall thesis for Bitcoin here. And I don't think any of the events, any of the economic numbers of last week have changed that in any material way. Now, if we, again, as I mentioned, perspective is everything. One way to view Bitcoin's price is to say, oh, well, we were north of 70,000, now we're at 60,000. Another way to view Bitcoin's current price is that the price has surged more than 100% in the last 12 months. So, we're doing quite well if you just zoom out. As the saying goes, when in doubt, zoom out. If you zoom out here, you'll discover that, in fact, Bitcoin is performing quite well, despite the 15 to 20% pullback that we recently experienced. And if we compare where we are right now relative to the halving with where we were in previous cycles relative to the halving, we are on schedule, if not ahead of schedule a bit. So if you look at the charts on a relative scale, the price chart for Bitcoin on a relative scale in 2020 or 2016 or 2012, we're pretty much where we need to be. And I should add something that, is often missed on many. Since 2012 and going through 2016 and 2020, we've never had the interest rate situation that we have right now, where we were at high interest rates and we think we're going into a period of easing. Now, whether that happens in July or September or December, no one really knows, but I think there's market consensus that we're eventually going to get a rate cut. And so all of the appreciation that we've experienced has happened absent a rate cut. And the charts that I'm showing you for the previous halvings happened without a rate cut. So I think the rate cut is going to add fuel to the fire and really cause us to experience a period of often called a face-ripping upside move for Bitcoin. So if we zoom out again, things are looking quite good. And then the most reliable metric, historically speaking, for determining whether the bull run was over or not has been the MVRV Z-score. And historically speaking, we've really never peaked out in terms of our cycle. We've never peaked out with an MVRV Z-score that was less than 7. And right now, with the pullback in price, we're now closer to 2. So we peaked out at around 3. Now we're back at 2. And historically speaking, we've always peaked out at least 7 for this Z-score. So based on this, I think, no, the bull run is not over, in case you are wondering. And I think this kind of sums up my position here, and that is, if you can't stomach a pullback of 15 to 20%, then don't expect to experience the appreciation that comes with a volatile asset like Bitcoin. So a lot of people get shaked out when they see a retracement like this. They panic, and obviously all the news is bad, sentiment is low, and then a small event happens that can really change the momentum of things. So in conclusion, some parting thoughts here. 20% pullback is peanuts compared to the appreciation that Bitcoin has experienced. It's never a good idea to sell when you're in a panicked state. Don't think the bull run is over. Obviously, we have to say inshallah, because we know that the future is controlled by only Allah subhanahu wa ta'ala, so we can't know it for sure. To enjoy outsized returns, you have to be able to stomach the corrections and pullbacks that happen especially with a volatile asset like Bitcoin. And I have to say, compared to previous cycles, the pullbacks this time around have been relatively muted. It's not that severe of a correction if we go from 70 to 60, especially considering 60 is double where we were just 1 year ago. And novice investors always look at pullbacks as sell signals, whereas a more experienced investor views pullbacks as buying signals. And I encourage myself to always view things this way. And by extension, I think it's a wise thing for investors to view things in this way. I think you'll do a lot better. You'll be on the right side of many more trades if you start looking at pullbacks, corrections as opportunities, despite the panic that one may feel. And with that, I encourage you to become a PIF member to follow exactly when we make our buys and sells and our portfolio positions. We try to earn halal alpha in a halal-conscious way, so do become part of the team. We'd love to have you. And with that, let's take some questions. Wa alaikum salam, Ayhan. Thank you very much. Salam, Rashad. What do I think about Jamie Dimon's recession prediction? It's possible that we're approaching a recession. That being said, what is clear is that inflation has been quite stubborn lately, and typically asset ownership tends to shield investors from inflation, tends to protect their wealth from inflation, pretty much removing 85% of the impact of inflation on purchasing power. And certainly if you're in the right assets, then you can outpace inflation. And that's certainly what we try to do at PIF. And I think we will do in a big way. So recession or not, this should not impact our understanding of the merits of investing and how it is a tool for us to protect our wealth and our purchasing power over time. Eventually, the recession, inshallah, if it happens, we will get out of. And the people that were able to position their wealth strategically during whatever period of market pullback that we experience will do well when the recovery happens. And I will say that the markets are not the economy. The economy may experience a recession, but if we have a rate cut, this can be bullish for the markets despite any slowdown in the economy. Does Japan BTC ETF has anything to do with BTC down to 60K? Do you mean the Hong Kong ETF? And I think that the BTC price is moved primarily by leveraged positions. So small changes in sentiment are obviously exaggerated in terms of a price movement because of all the leverage that there is in the markets, whether that is investors betting that the price is going to go down, so shorts, or investors betting that the price is going to go up, longs. So whether it's long or short leverage, any small change in sentiment tends to be exaggerated, especially with assets like Bitcoin, which tend to attract a lot of leverage because of just the nature of the asset and the volatility of it. People looking for leverage, that people who have a large appetite for risk, which are leverage traders, tend to be attracted to it. So I think that's really, so we had some data last week that was indicated an economic slowdown with the GDP numbers and inflation still running at least warm, if not hot. So this caused a small change in investor sentiment, actually a, a material change in investor sentiment, but I think that was exaggerated by all the leverage and the liquidations that happened in the market. Wa alaikum salam. What's your advice for someone who doesn't have any BTC, who just learned about it and very interested in buying it, buy now or wait? My advice is the same to anyone who asks me, which is that at this point in the cycle, I think it's a good idea to dollar cost average. That means, if you have an amount of money, chop it up into smaller bits, invest in equal time increments. So maybe every week or every other week. I actually think every other week may be stretching it too much. So maybe every week, set aside a day, invest money on that day, and just continue to build up a position that way. I think probably 12 months from now, I'll tell you if you ask me. And obviously, this is data dependent. But if you ask me, there's a larger chance that I'll say, oh, maybe you should not be buying Bitcoin at this point in the cycle. There may be some other assets that are more attractive. But at this point in the cycle, I think dollar cost averaging is the way to go. And given the pullback, I would probably be more aggressive with my buying. What's your okay? Assalamu everyone. Wa alaikum salam. Question: do you think the miners will start a bull run this year? I do think they will start a bull run this year. I wish I could determine exactly when, but I think it's coming. Current thoughts about Doge. I like Doge. I receive a lot of hate because I am a fan of Doge, and typically that hate comes from Bitcoin maximalists. But I will remind these folks that Doge is a fork of Bitcoin. The code is common between Doge and Bitcoin, with exception to a very few lines of code. So I think there's a lot of merit to it. I think it probably has a better chance at being used as a currency. But we shall see. This is not to say that Bitcoin is not a good store of value. I think it is a very good store of value, better than Doge, just because it has a max supply. But I distinguish between the two functions. That is, the function as a store of value and the function as a currency, so a means of exchange. And I think Doge probably has a better chance of being a means of exchange. Ethereum, I'm just not a fan of. I'm more a fan of Solana. I think it's the better solution, has better throughput, lower costs. I really have not found a way to use Ethereum without incurring transaction fees that make it prohibitive. So I just don't see why someone who's building an app would use it versus something like Solana. I think basically the apps that started on Ethereum are basically continuing on it because of costs of moving to a different solution. But most of the newer apps are using Solana. And eventually, this is going to reflect itself in the price of each asset. Wayakum, inshallah. Do you think Tesla is a good buy now, or should we expect another dip? Better buying opportunity? I think Tesla is a good buy now. I think that there's somewhat of a backstop on its price up until the August event with regards to robotaxis. So that event and anticipation for it will continue to act as support for its price. I may take profits leading into the event. So the typical buy the rumor, sell the news trade. I may do that depending on how much it runs up. That being said, keep in mind this is a stock that was above 400 a few years ago. So I still think it's attractively priced here at around 180. Wayakum, how low do you think we can go if we keep going down? I honestly think we're closer to the end of this correction. So there is less downward movement than what we've already experienced. I'm talking with regards to Bitcoin. So we'll see, though. Time will tell. I hope you found this beneficial. Leave a like if you did, and subscribe. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.